Hello and very warm welcome at Twitter Incorporated Analysis. Today we will discuss about Twitter, ticker name TWTR, and this is very interesting stock and actually very interesting situation overall, because it's one of those rare cases when the company decline is not only based by kind of a technical precondition that was forming 2 weeks ago, but also by the company involved in a heavily political discussions and actions, and aftermath of this you could see. And as we know, of course, overall there are two situations. One, it was technical, let's say, wave finishing of the Twitter that started at let's say 10 of December here, and it was classical nice wave. It was facing towards moving average 20, and yeah, it was about to maybe restart another one or do some small pullback and restart because company was overall growing. But no, the news, and you all know this news, the news stick that Twitter blocked current president of United States, President Trump, its account, and of course the price plundered down. And you see already, like, several days were declining, and especially today, it's a very long jump down. Although, of course, for a company which this strong history and super huge capitalization, one of the flagmans of actually social media, the traders did not allow it to fall further. It just stick at this current price, and you see the volume traded today indeed was also to confirm this situation. And as always, we see that these volumes traded usually means that we will have a spiking back price action move that we saw, for example, by end of September and also by end of October. It could be seen again, so we might see the spike for tomorrow. But first of all, it's important not only to understand technically and the news reaction of the market, but why there is something stronger and longer that could take place, and why this action, although supported by many and of course supported by modern, let's say, stream of media, etc., why is it still causing that decline? And the reason for this is it's not the fact that account was blocked, doesn't matter for whom, but the fact is it's one of the first situations when on the such super high level, the highest global level, a company decides to engage and interfere, not really engage, to interfere into the public political discussions by blocking. Of course, you could say it was rightful or not rightful. It's out of this discussion. The situation is that people did not like it, and when I say people, actually politicians globally did not like it, and you already can hear certain discussions. And this is really very nice to see this on, well, I mean, nice as a academical example. You can see the situation, how it causes the price fraction of the company. Many countries' politicians already raise concerns about, is it actually allowed for company having this much presence on social media, even to be able to do so legally? Is it really allowed? And you can already hear concerns, for example, coming from European Union or from Germany, that probably companies like this should not be allowed, and there should be legislation preventing from this. And although, let's say momentarily, tactically, this action for Twitter, and we are really now discussing politics maybe rather than the price action, it was maybe, let's say, encouraged, or maybe if not encouraged, but let's say welcomed by those who liked that the account was blocked from Mr. Trump. But still, even those people would think, well, if situation repeats, would we like to have this happening from us, from our accounts? And it might be there will be stronger legislations coming, not only for Twitter, of course, but for all social medias. And that's why Twitter, and by Twitter also other big companies like Facebook and others, are declining, although smaller, declining today. So this is really a moment when the Pandoran box was opened, in a sense that when business interferes to public discussions, to political public discussions, this could happen. And now, having said this, so to understand that impact is not only momentarily, it's more deep expectation for further legislation to come that will, of course, also hamper a certain business opportunities for companies. And fearing this, we see those declines, and especially given the fact that technically it was also in a correction mood somewhere by end of December. So this is acceleration of technical correction, which is caused by those legislation expectations that might come for company, therefore causing this price. So now what could happen technically speaking? We see that RSI is indeed went down exponentially, almost facing oversold area, which was at least recently not seen for company of this size and this performance. It was only slightly in the middle of, let's say, a lower part of RSI by November. Now looks like we still will go really to oversold, sorry, for Twitter and go below 30 for RSI. And what still could be happening as well, we could do a spike. This is very possible because today candle is very nice, interesting in the sense that it's extremely volatile. And at the end, the bulls did prevail in a sense of the candle action, of course, not the price action in comparison with opening of yesterday and closure of yesterday. But what we can see here is that we could make an immediate spike and then decline. It could be compared to situations like a broken and immediately recovered wave. And the reason for that is because this is too fast action for such a huge company. So we could immediately recover tomorrow until 52 even. But here what is important to see is moving average 20. And by the way, speaking of moving averages, here we have three moving averages as always depicted at our daily charts. This three colorful line, moving average 20, 50 and 200 being green, blue and red line correspondingly. Here on the left you see their depiction. So moving average 20, if you look carefully here, it's starting to bend. It's starting to bend downwards because we were just about to reconfirm the wave, and in general it was slightly decelerating, but now with this news it will start bending further. And usually these patterns, also of course moving average 50 will follow. These patterns create a trapping channel for the price action, meaning that the price could stick inside of these two descending moving averages, and it could stay volatile and slightly degrading until it goes to spike. And that's what we can observe here, although tomorrow, if you're already in the position, maybe wait for that spike, or if it starts with this volatility, you can just buy here for the spike, but the price most probably will jump up, rebounds from declining moving average 20, and then we will start going down. And of course that would be the trade strategy here for those who are technical traders, because first of all, if you think of why the price indeed stuck here, well, in this area it was formed a very strong core support level, and that's exactly where we're sitting in, and the lower part of it of course is at another support level. So we were just balancing today and also trying to pierce moving average 50, but no, it didn't happen also due to technical reasons. So this S1, S2 channel where we stuck for a quick scalp, if we anywhere price hits tomorrow, we can buy, because we could hope for return and trap between moving average 20 and 50, as we just discussed. So if this is taking place, then exit is advised in the vicinity of moving average 20, immediately around area 52, because then you can do a quick scalp here. And then exit and wait for further decline, because then decline might start and you need to be prepared either to average down if you want still to keep your position, or buy again at the lower levels. And of course, if you talk further opportunities here, at least it might most logical would be to come in these vicinities. So S3, S4 would be another buy here, or average down if the price immediately declines. And then should it go further, then of course we're entering a very stable zone, which was also seen in August, and now it will be reconfirmed with moving average 200 here will be very strong price. So this would be S5 support line, and also the top of the buying channel will be defined by moving average 200, which will also start bending slightly by that time definitely, and this would be below moving average 200, and S5 the last entry opportunity here. And then it's advised here to buy with 1-2-2 strategy, meaning the funds you would like to play here you can split in 5, and then you can buy already with 1 and do immediate exit, by the way, if you like, at moving average 20. It will be quick scalp, and then you can rebuy one once it returns again to S1, S2. Then first time you average down with 2 portions, and last time you average down again with 2 portions according to the entry levels described here with dark circles. This would be the best optimization of profit versus loss, especially we need to consider indeed the deeper support, because if these political discussions on limiting possibilities for for blocking of official or public people's accounts will come, or at least discussion will come. At least it might start in Europe, in European Union domain. Then, of course, there might be a stronger decline. And by the way, there is no surprise in the decline. Even without any news, we were in that area already from August till December. So it's quite normal, even price-wise, technically, to return to this area. So we need to be prepared for this and being able to trade here. So with this having said, that's the situation, how to trade. Of course, if you look MACD-wise, and you would think yourself, when will be this indication of stopping of decline and when there is return point? Well, this you can define also by, let's say, a reversive behavior of MACD histogram, because here you see the decline that happened in November once MACD histogram started to reverse upwards with bottoming negatively. We saw indeed the overall price going up. The same could be seen here. Once the histogram, now it's in downwards acceleration, will start recovery. So once we see this bottoming, this would be signal for really final return. And it could be, of course, midterm return, and then it will be either in the S3, S4 channel or below SMA 200 and S5. So hoping for this, waiting for this, you can trade here. And as always, in discussing exit opportunities, we always advise either to wait until the previous next entry channel to exit, or just do 10%, because there are always opportunities. Also at our channel, we discuss daily many videos. Also, previous videos are still fresh in the sense that the date on the video posture is just the date when it was placed at the channel. It doesn't mean that it's outdated with technical and the play opportunities, so you can just view those. The situation discussed there might be just about to happen, so you can place your price targets and make the trade, make the profit. So be consistent trader, trade multiple times positively rather than trying to become rich from one trade. This is usually not possible, and kind of a reason why many young traders or beginners fail in the first year of their trading experience. So with this having said, good luck. Indeed, with a very interesting, of course, very publicly known company and engaging a little bit more than business, and now we see consequence for that. So we'll see how it will develop. I think it will, of course, be academic example in future. Many books will be discussed many times. So we are kind of observing a situation or formation of a classical pattern, kind of which will go to the history of stocks trading, definitely. So good luck with Twitter. Also, please don't forget to subscribe to our channel if you're first time at this channel, and also please press the bell button. This way you will not miss our new videos and new interesting discussions for US based stocks. With this having said, see you at another episode of Stocks Advisor channel.